The Orange County housing market has officially shifted gears. How long have we been waiting? Buyer demand is waking up fast. Mortgage rates are materially lower than last year, and the winter market is now fully underway. This is the moment when the market starts to move, and it's happening right now. I'm Tim Smith with the Tim Smith Real Estate Group, and this is your February 2026 Orange County housing market update. The winter market has arrived. Every year, regardless of headlines or economic noise, the Orange County housing market accelerates starting in mid-January. Buyers who pause during the holidays come back all at once while inventory rises much more slowly. That imbalance is what speeds the market up, and we're seeing it unfold again. The supply-demand imbalance. Mortgage rates have been hovering between 6 and 6.5% since early fall, a full percentage point lower than where we started last year. That improvement in affordability is bringing buyers back into the market faster than most people realize. Inventory rose sharply to start the year, climbing 13% in mid-January, the highest level we've seen since 2020. A big reason for this jump is seasonal. Many homes that were pulled off the market during the holidays were being relisted. That said, inventory is still well below historic norms. Compared to pre-COVID averages, Orange County would typically have closer to 4,600 homes on the market at this time of year. And while inventory will continue to rise in the spring, it does so at a much slower pace than buyer demand. The key takeaway, buyers have more choice today than they did last year, but supply is still limited relative to how quickly demand is about to increase. Demand dipped slightly in early January, but that drop is seasonal and temporary, and the pulse and feeling in the market is exciting. Historically, demand surges dramatically between mid-January and mid-March. Last year, demand jumped nearly 70% during that same window. The same pattern played out in 2023 and 24. Buyers are re-entering the market now, and with rates meaningfully lower than last year, demand is expected to rise quickly over the next several weeks. In short, the quiet phase is ending. With inventory rising faster than demand in early January, expected market time jumped to 101 days, the slowest mid-January pace since 2019. That sounds alarming at first, but it's typical at the very start of the winter market. Here's what matters. As demand accelerates and inventory rises more gradually, market time historically drops sharply between now and March. Last year, expected market time fell by 22 days over the same period. That's the market shifting from slow to fast in real time. For buyers, this is the launch window. Rates are lower, competition is still light, and selection has improved. Once demand surges fully into late February and March, leverage shifts quickly. Buyers who act early typically get better pricing, better terms, and more choice. For sellers, demand is building, not peaking. If you're planning to sell this spring, you're approaching the part of the cycle when buyer activity ramps up faster than inventory. Proper pricing and preparation right now can position you strongly as momentum increases. I'm Tim Smith with the Tim Smith Real Estate Group. If you want to understand exactly how these market shifts affect your buying or selling strategy, let's connect.